Okay guys, welcome back to Narex FX channel. So this particular trade, this is not a video I'm supposed to make. So just like my normal thing I know always do, I did a video on gold and I took an entry. I just wanted to wait for my particular trade to this particular trade to go to take profit before I come back with the whole video of how I got my setup and everything. So this was what happened. I hit stop loss, and guys, I want to tell you why I hit stop loss and how to avoid this during trading. So I lost about $30 this morning, but I'll tell you why and what happened. So guys, before I go into the video and explanation, please, if you have not still subscribed to my channel, please do well to subscribe. And you're seeing this for the first time, I have so many other videos on how I did top down analysis, please, so you can go to my page and look out for videos on how to do some analysis. So guys, this was what I did, and I'll be giving you 5 reasons why you should not trade during the Asian section, especially on gold. So guys, subscribe and thank you. Let's go down to the video, guys. So guys, welcome back to the chat, and this was me around 1:45 a.m. I could remember the exact time I took that trade. Look at this range here, showing you 2 a.m., but I took the trade around 1 a.m. this morning. So I've explained everything. I had my break of structure here, and I had my liquidity here I wanted price to go for. So that was everything I need, and this was what happened here, guys. This is the liquidity you know I did not really see that much. I did not really see this liquidity during the time of trading. So it's not like I did not really see this liquidity. I thought that this particular week here, this week, you see how price got rejected, took out the internal range liquidity. Let me take you like to 5 minutes, 1 minute, so you understand what I'm saying. So now look at this point here on the 1 minute, guys. So on the 1 minute, this is what you have here. You have price to treat external range liquidity here. This is an external range liquidity. Let me draw it out. So this was like liquidity, and see here, this is the 1 minute chart, guys, don't get it confused. So price came down into this particular point and took out this whole liquidity right below here. But this is something with gold. Why gold is taking out liquidity is also building liquidity on the higher time frame. So I thought that price took out all this liquidity here. This is the Asian time, Tokyo time. So price built liquidity on the 15 minutes. So why it was taking out liquidity on the 1 minute? So it caused a break of structure here above here. So I know that yes, I was ready to go into this market. Why? Because I have a change of character here. I have a break of structure here, and I had that price that's taking out liquidity from this whole zone. So guess what happened around this zone? Around 5 minutes. I was already convinced that this price is ready to move from here because this place was where liquidity was taken. So I was just certain that price will take out this whole liquidity, break structure, and continue going down to where I have my last take profit. Now, 5 reasons why you should not trade during the Asian time. This is number one. Number one, price tend to take out the Asian liquidity on the London section. So this was what happened, guys. Price came during the London section. Exactly, this is this is about okay, this is about 2:30 p.m. 2:30, sorry, 2:30 a.m. Around 2:30 a.m. price came and it take out liquidity. So price will not even wait for the London session. After it stole liquidity from this particular place, I was just expecting it to continue moving from here upward. It took out liquidity to a certain point and still built more liquidity here. This is serious, guys. This is really serious. So at this point, market was mostly being manipulated. It was just creating liquidity. So it took out liquidity here and they went back. It went back from the London session. London session started around 8, so took our liquidity and it went back around London session, guys. So the first thing is that you have to wait for price to take out the Asian section liquidity, and this was another mistake I made. I did not look at my chart here using this whole daily analysis here. This is a whole day chart, and you can see that this low was relative. If assuming this place took out this low, that's what I'm supposed to do at first. I would have waited for liquidity to be taken below the previous day low. So on London session or later in the New York session, like 2 hours after we entered this trade up above here, price took out the previous day liquidity. So that's what London session mostly do, take out either the previous day low or the previous day high. So you can see here it took out the previous day high. So we can still expect price to start dropping from here. So price can start dropping from here massively right now because it took out the previous day high. Then to a certain point, we will now have another retracement to form the day, like take out the previous day high, it comes down here to form the low of today. The low of today might be formed during the time, form the low of today, then goes to form the high of today, taking out this whole range. You might just take out this high here, come down, form the low of the day. After you took out this first liquidity, you see how price reacts to every form of liquidity. Price does react to every form of liquidity in the market. So number one is to avoid trading during the Asian section because that is the time price mostly builds liquidity. But it's not all the time. Most time price can just, due to the momentum of the previous day market, price can just start moving just like here. If you see what happened on Monday, price just moved all the way from the Asian section down. It did not even give you any chance of entry. So price can just be in that way. Even this other point here, even this other point here, this is like on Friday. This was what price did here. This is the Asian zone. Price came down, and imagine you bought from here like I did today. This is what happened. Price came down to this particular point here, took out liquidity here before it started moving. So more like I said, if you're trading from the Asian time, you have 70 percent probability of being stopped out because price will mostly come for Asian low liquidity, and you might not really know where exactly the price is going to stop before it start moving in your favor. So most thing you do is to always come to gold around London session. Then you trade from London session, you might get a higher chance of staying alive in the market. So this is it here, price took out liquidity and went. So sometimes you don't have to see price come back to your zone. You might not take out your liquidity, or you can just come just like you did here to take out the previous day liquidity. So that was it. Number two, you should look out for your overall time frame, like your daily range. So this was the range here I ignored also. So not just Asian low, I ignored this previous day liquidity. Like I said, I thought this was where I had my liquidity. So that was not even correct. What price did was it tricked me and it built more liquidity below here. It built more liquidity which it took out during the Asian section. And I'm sure now London session is going, which we are in London session now. Asian section took out the low of this day. London session is going to take out this high, then it is going to form, it's going to drop down a little, forming the low of today. Forming the low of today, then it's going to continue up during the New York session. So if I'm to trade this particular market, it's in the New York session, then I'll know that we are going to form the high of the day during the New York session, breaking above all this range because liquidity is being created in all this range. So guys, that's just what happened to me during the Asian session. So my comeback will be during the New York session. So I'll come back, look for an opportunity, then take the trade. Then at the end of the day, I'll see how it goes. So that's it, guys. See you guys during the New York session. So guys, still on this trade, I'm still holding this particular gold trade, and very soon we'll be going into New York session. So guys, this is it here. I have price to take out previous day high. Look at, I have price to take out previous day high. This is the previous day high here, and this is an inducement, a liquidity. So price has swept liquidity above this zone, and I'm not expecting price to come back around here, around this place here. So I want to see price continue its bearish movement at least down to this inversion fair value gap here before we can continue buying in the New York time. That will be later on in the New York time. So we want to see price sell down to this inversion fair value gap. So this is like our POI for the New York time. So let's see how price react to this zone. Currently I'm still on a loss here, so this is what I'm waiting for. So we just want to see how price is going to react down to this place. So I've been holding this particular trade. You can see what's going here. You see how price came in. I took my entry around here. So price went back, took out liquidity here from this particular place, reacted to the other block, just coming out. It's still fluctuating. So I just want to have this place here. If price should give me a market structure shift here, this will be where I will have my market structure shift on the 5 minutes. So if I see price sell below here, then I'm quite good that I'll be reaching this point. So I'm still hoping that we break structure here on the New York section. So if you check out for 1 minute, this is what we have on the 1 minute, guys. So this is it, guys. I'm still hoping that price plays along very well. So guys, I'll be coming back later on in New York session to see what we have here. And I'll also check if there's any news update around 1:30, because that's another thing that can either disrupt the price or make it go in my favor. So guys, I'm going to check out on this trade if we have any high impact news. Today is Wednesday. I'm not sure we are going to have any news. So let's see how this particular trade goes. But I'll still check. If there is a news, I'll still add it up to the video. Maybe close positions, then come to take trade after the news. But if there's no news, I'll hold on to this particular setup. Alright guys. See you later on in New York session. Alright guys, so I just checked my calendar today and I noticed that we'll be having a CPI news release by 1:30. So this is about 3 minutes to the CPI, and I'm going to lock two of my entries here. Then I'll let two run with stop loss. So I'm going to take two entries down here. Then after locking these two positions here, that is already in profit, then I'll just wait. But remember guys, I said on the 1 hour I want to see price come to this imbalance during the New York time. So let's see what the CPI have. So if the CPI goes bearish, then we wait for a buy around there. Then if it goes bullish, then that's all for today, guys. So I'll be posting. I'll be coming back to this chart after CPI to see what we'll have next. All right, guys. Okay guys, this is during the CPI and I'm just waiting for price to come into my IFVG, the inversion fair value gap here on the 5 minutes. So I'm just holding on to price to come into this gap. So I'm still patient. I still want price to come into my level before I can start buying from this inversion fair value gap where I have this rectangle here. So I'll just be watching this price till it comes in, then I'll close all the sell and scalp down a little bit upwards, because I'm expecting price to come in there and reject from the. So guys, just like I said in the video earlier on, that I will be taking my entries from this inversion fair value gap, and you can see what price did here. It just tapped in and it ran out. So guys, that's just it on this particular trade. I closed two positions during the news and I sold down to this point. Then I'll be closing half of it here. So I'll be closing some positions, then I might allow some run throughout the day. So that's just how to trade waiting for the news. I was just saying that after the release of the news, I will come to this point waiting for price to fill in this imbalance with the news, then continue going. So guys, this is what I have for you guys for today on gold setup. So please do have to subscribe for more info. So this is like a live analysis waiting for price to play out while I'm trading as well. So that's just it, guys. So thank you for watching to the end, and please subscribe to my channel for more info. All right, guys, see you in the next video. Still on today's range, I just want to do a quick rundown or a quick review on today's analysis after everything. So just like I said previously, that this will be the high of the day, like after liquidity has been swept below this high, below the previous day high. This is the previous day high. I had the liquidity swept here, so the CPI came in, took more liquidity from this point here, and before the CPI I had locked like two positions that I had like four positions. I locked two, then I allowed two to run. So CPI, I had two positions without stop loss. Yeah, but I was just watching it. I already locked two. So this was what happened. Just like I anticipated, guys. I took a scalp on this particular market. Now, before I bought from this FVG here, I took a buy from this FVG here. So, and now on the 5 minutes, notice that I say that if price trade below here, that will be having a break of structure to the bearish side. So, I scalped a little bit from the 1 hour imbalance. Yeah, so from here, from this 1 hour imbalance, I took a scalp trade here, which later retraced back to this particular level. After a break of structure, you will always get a retracement. So if you look at it from the 1 minute, you will see that price went back into the premium zone, which it did here, which I scalped from here. So I took the scalp back to this zone. Then after the scalping, price continued selling. So that was just it. So remember I said that here will be our break of structure to the downside, or market shift to the downside here. So before the news, I just wanted to see price close below here. So this was what it did during the news. So with the news, it closed below, entered the fair value gap, then it rejected from this fair value gap back, then came down a little and it continued bearish, just like anticipated for today. So today was more of a bearish move. So that was what really happened on gold here. After I took out liquidity, went for this liquidity, and the high of the day, it took it out, and it was supposed to drop here, but it could not. It used the CPI momentum, and it dropped down to this imbalance here, this IFVG. It dropped down to this IFVG, then it retraced it retraced back, then still on the same candlestick, it came down a little, closed, and gave you this momentum you've seen here now. So that's just what really happened here, guys. So that's just how I was able to get an entry on gold today. After I was being stopped out because my initial bias was bullish, but when I was now out of Asian section, I started the analysis on Asian session, but when I came into New York session, I saw a change. I saw a change in the sense that price did not break above this high, this previous day high. It swept liquidity. So I knew that if price is sweeping liquidity from this zone, that means we are definitely going to change direction. Since I did not have a BOS to the upside around London session, I did not have a BOS, so I knew that definitely we'll be dropping a little to take out more of liquidity, more of the internal range liquidity, coming down to take out more of the internal range liquidity. Here you can see it's more likely that price has balanced a little bit instead of creating more higher highs here. So price came down to balance this range a little bit. So that's just it. So we'll still be expecting more like a retracement down into the, should I call it like the premium level. We are at the discount. So now it is really safe to look for buys from here. So we'll be expecting retracement down to premium zone before we can continue selling. Notice that we have a break of structure already, even as big as a 15-minute here. We have this place to be a break of structure, guys. But I'm not really here doing an analysis. I'm just showing you a result, like it's more like a review. But this is a break of structure, and we are bearish, full time bearish, until we have a shift in market structure on the 1 minute, which we don't really have right now. Okay, this is it here. This is a shift in market structure here for the bullish side. So we still want to see price come down a little, because this are liquidity, this range here, we still have more range of liquidity here. But that's just it for today, guys. Let me don't go further, because the way I'm seeing it, I can continue analyzing the chart over and over and over again. But I'm just talking about the trade I took today, so there's no need of me going further to explain more. So, guys, if you've watched down to the end of this video, please do well to like, subscribe, share, and also comment. Thank you, guys, and you know, remain blessed. So let's just